Hey, Friday traders. So today's economic data didn't move the markets much. We had core PCE data, everyone was waiting for that. It came in bang in line with expectations, and that caused the dollar to give back some of its gains that were made during this week on the back of the stronger than expected economic reports from the US. We did have personal income and spending, both of which coming in slightly stronger than expected. But then the consumer sentiment from University of Michigan was revised slightly lower to 55.1. Next week, the economic calendar is quite busy with lots of employment data from the US, which could be significant insofar as the interest rate expectations are concerned. But for the time being, the dollar is weakening, giving back some of its gains, especially against the likes of the euro, which remain a strong currency. Now, the euro dollar chart is still holding above the bullish trend line. It did break its support here at 117.30, where we also have the 21-day exponential moving average. So that level is now going to be important so far as the short-term resistance levels are concerned. For me, it will need to now get back above that level if it were to challenge the summer highs of 118 plus. But the longer term trend for the euro dollar is bullish, as indicated by the higher highs and higher lows, for example. So this could just be a small pullback in what is still a bullish trend. Not a very clean one, but it is nonetheless making higher highs and higher lows. So for that reason, we will maintain a bullish view on this currency pair until the charts tell us otherwise. European equity markets are pushing higher into the close. As you can see, the Spanish IBEX is leading the charge here. But we have the FTSE also up 0.5%, climbing back above the 21-day exponential moving average following a lengthy consolidation period. It looks like the breakout is on now, and from here the index could potentially reach for the all-time high that was hit in August at 93.60. That level is now going to be the next upside target. Ahead of it, there are a couple of other resistance levels on the way, including the 9,300 level. But for me, that 9,360 is now the key level to watch. In terms of support levels, well, this level held following multiple tests of it at 91.90. And now the next level of support above this area to watch is around here somewhere. As you can see by the wicks of these candles, we tried to break above here for a number of days, but today it looks like the bulls have finally managed to break through. So any rounded retest of that from above could potentially provide a tradable bounce in next week. The German DAX index is also looking interesting from a bullish point of view. It has been consolidating its recent sharp gains for the last few months. It hasn't really broken out to join the rally on Wall Street yet, but the underlying trend remains bullish, and the lengthy consolidation here has allowed the RSI and other indicators to work off their overbought conditions through time. And as you can see, the RSI is no longer at overbought levels that it had reached before the start of the summer. At these levels at around 50 or so, the RSI is banging neutral grounds, meaning that the conditions look ripe for a possible breakout to the upside, because the index is testing this key area of support as well, which has held. This area was resistance back in March of this year. We sold off from there, didn't we, on the back of the tariff announcement from the US before global markets rallied in April, and we broke above those highs. That area has been tested on a number of occasions, as you can see by these candles. And for as long as it holds a support and we don't close decisively below it, the path of least resistance will remain to the upside insofar as the medium term is concerned. So this area is between 23,200 to 23,480, as I've shaded it in blue on the chart. Now it looks like the DAX is poking its head above the resistance trend and the 21-day exponential moving average, and if we can close above it, it will be an indication that the bulls are happy to push the market higher once again. So going into the week ahead, the likes of the DAX and the FTSE are among the more interesting indices to watch for potential breakouts on both of them. For more market updates and insights, make sure to check out the news and analysis section at cityindex.com. I'll see you in the next video. Take care.